So we're going to work on Plut's accounts to see if we can extract the various payments and collections from these details. So let's start with A, collections from customers. We have a number of helpful accounts. What accounts should we be looking at to figure out collections? Accounts receivable, yes, and sales. So let's reconstruct the T account for accounts receivable. Just to review, accounts receivable goes up by credit sales and down by collections. So let's populate it here. So beginning accounts receivable was last year's ending, and ending is this amount they gave us, and it would go up by credit sales. And so we can then solve for how much it went down by. So you can do this algebraically if you like. 6, the beginning, plus this minus x equal that, if that helps you. And whatever you compute, you can always check your answer. So add these two, subtract this, and see, do you in fact get $7.99 as the ending balance? So collections would be $24,934. All right, let's look at B. B is a little more complicated because payments for inventory require that you first solve for purchases and then for payments. And so we will need both the inventory account and the accounts payable account, assuming that all the purchases were bought on credit. So let's just review these accounts. Inventory goes up by purchases and down by cost of goods sold. Accounts payable goes up by purchases and down by payments. All right, so we have to solve for the purchases here and then put it in accounts payable in order to solve for the payments. So let's populate these accounts. So beginning inventory, 2839. Ending inventory, 3489. Cost of goods sold, get that off the income statement. So now we can solve for purchases. You can do beginning plus x minus 18 gives you the ending balance if you want to use your algebra, which is perfectly fine. And then of course once you have your amount, you can check your math. You can add these two, subtract that, and make sure in fact you do get the ending balance. So we have purchases now which can go into accounts payable. Alright, and we have beginning accounts payable given to us 1364 and ending accounts payable. Okay, now we can solve for payments because payments would make accounts payable go down. Alright, so now we know the payments for inventory, but it required navigating two separate accounts. Okay, let's move on to C. So now we're going to work on the equipment account. We want to know what we paid for acquiring equipment, so let's populate the account. You may be able to do this by just looking at the shift and balance, but we'll just keep the discipline up. 3436, ending was 4619. Equipment would go up by purchases and down by disposals. Were there any disposals during the year? They say no. So that would be 0. And so the purchases would just be the difference, the shift in the account. So there are your purchases during the period. Alright, let's move to D. So let's review what the loan account liabilities accounts would look like. They would have beginning, any new liabilities, any new loans would increase it. Any repayments on old loans would decrease it. So let's populate the account. It starts with 1321, ends with 1420, and there were no repayments, so that means this account is 0 here. So new loans must be just the shift in the account, since they tell us that there were no reductions. Okay, let's move on to E. So here's the stock account. It goes up by issuing new shares. So you can tell from the shift probably that we did issue some shares. And we can solve for the amount. Or you can just take the arithmetic difference there if you don't want the discipline of filling out the T account. Okay, last one, F, payment of dividends. Let's review the retained earnings account. It goes up by net income and down by dividends. So let's populate it, beginning 3779, ending 5014, and net income was 1810. So dividends would have reduced it. So these two minus that gives us that. So here you had to know that the dividend activity would have impacted retained earnings, and therefore by analyzing retained earnings you can discover what the dividends were.